Hey there, financial fanatics. Ever wondered what happens when banks feel the heat? Today, we're diving into the drama surrounding the PacWest Bancorp, whose stock just crashed 53% as they weigh their options for survival. So buckle up and let's dive into this financial roller coaster. First things first, the Federal Reserve, or the Fed as it's commonly known, is the central bank of the United States. They're responsible for monetary policy, including setting interest rates. These interest rates impact the entire economy, especially banks, as they affect the cost of borrowing money and the returns on investments. Now, when interest rates rise, as they have been for roughly the past year, thanks to our all-knowing Fed, banks' costs increase and the value of their investments may decline, potentially leading to financial trouble. With that in mind, let's dive into the PacWest juicy details. PacWest, a teetering California lender, is seeking a financial lifeline amid the worst industry turmoil since 2008. They have been approached by potential partners and investors and are currently reviewing strategic options to maximize shareholder value. Boutique investment bank Piper Sandler is said to be helping PacWest explore these options, including a sale or raising new capital. The bank recently raised $1.4 billion through a loan agreement with Atlas Partners, an investment group supported by Apollo Global Management, a well-known private equity firm. This move was necessary after PacWest experienced a loss of more than $5 billion in customer deposits during the first quarter of the year. However, they managed to stop further loss of deposits and actually received more than $1 billion in new deposits since March. As of May 2nd, their total deposits amounted to $28 billion, and they assured that their cash on hand and ability to access additional funds remains solid. Like other regional banks, PacWest has drawn negative attention because of its similarities to Silicon Valley Bank, which collapsed back in March. These similarities include ties to the tech industry, large amounts of uninsured deposits, and paper losses on their securities portfolio. More than 3/4 of PacWest's lending is to property, which is another area of concern in a period of rising interest rates, and 8% is to venture capital. Amid the Fed's controversial rate hikes, PacWest's stock price took a nosedive, plummeting over 50% in after-hours trading. Bloomberg reported that the bank is considering a sale, exploring a breakup, or raising capital to stay afloat. Yikes. Talk about being between a rock and a hard place. The Fed's recent interest rate hikes have put the squeeze on several regional banks, with some collapsing under the pressure. First Republic Bank, Silicon Valley Bank, and Signature Bank are just a few examples of banks that have failed after clients withdrew money en masse. Many of these regional banks relied on high dollar accounts to invest in U.S. Treasuries, but as interest rates increased, Treasuries lost value, sparking concerns about the bank's stability. But wait, there's a plot twist. PacWest CEO Paul Taylor mentioned in an earnings release that deposits stabilized in April after some significant withdrawals in March. So are they really in hot water, or is this just a temporary bump in the road? In a recent statement, PacWest confirmed they're exploring all strategic options, which is really just kind of Wall Street speak for please help. They're in talks with potential partners and investors, evaluating options to maximize shareholder value. And PacWest stock this year has plunged 72%, and other regional banks like Western Alliance have also experienced significant drops in after-hours trading. So clearly PacWest is facing some serious challenges as they navigate the stormy waters of a rapidly changing financial landscape. With interest rates on the rise, regional banks like PacWest are feeling the pressure, and it remains to be seen whether they can overcome the obstacles ahead. As they explore strategic options and work with potential partners and investors, we'll be keeping a close eye on how the situation unfolds. As the world of finance continues to evolve, it's more important than ever to stay informed about the latest news and developments. We'll be right here to keep you updated with all the twists and turns as we watch banks like PacWest grapple with the challenges of a dynamic economic environment. Remember to like, subscribe, and hit that bell for notifications so you never miss an update on PacWest and other financial stories that matter to you. Until next time, stay financially savvy and keep your eyes on the market.